GM's stock sank on uncertainty, but now it can rise on relief. General Motors made investors nervous when it withdrew its full-year profit guidance. However, General Motors had forecast beating quarterly results and struck a tentative deal to end the workers' strike. Investors should strongly consider owning GM stock while it's still at a low price. Let's dive in. The General Motors comeback. Here's why GM stock is too good to pass up right now. Welcome to Timely Investment Research. General Motors, along with Ford and Stellantis, is one of the Detroit Three group of American automakers. All three companies experienced financial and operational setbacks due to the United Auto Workers strike in October. However, now that General Motors has seemingly resolved its dispute with the auto workers, investors can expect GM stock to bounce back from its current level. Suffice it to say, October was a rough month for General Motors and for the Detroit Three in general. The auto workers' strike just kept dragging on, week after week. Yet, as the old saying goes, with every crisis, there is an opportunity. General Motors will have to deal with the financial impact of the United Auto Workers strike for a while, no doubt. Still, investors now have access to an ultra-cheap stock representing an iconic American automaker with comeback potential. GM stock is ridiculously cheap now. Speaking of ultra-cheap stocks, GM stock recently bounced off its 52-week low, and General Motors is trading at an absurdly low valuation multiple. Specifically, General Motors has a generally accepted accounting principles trailing 12-month price-to-earnings ratio of 4.19x. For comparison, the sector median PE ratio is 15.55x. You typically won't see a great value like this unless something scary happens. In this case, the United Auto Workers strike's impact was so deep that General Motors withdrew its full-year 2023 profit guidance. Furthermore, according to a Bloomberg report, General Motors management estimated $200 million per week of ongoing costs to the company due to the United Auto Workers strike. That was the main takeaway for some nervous investors. On the other hand, people who panic-sold GM stock may have ignored General Motors' positive third-quarter 2023 results. Impressively, General Motors generated $44.1 billion in revenue, beating the analysts' consensus forecast by nearly $1 billion. Moreover, the company's quarterly adjusted earnings per share of $2.28 came in far ahead of Wall Street's estimate of $1.84. General Motors settles its dispute with the United Auto Workers. At long last, in late October, General Motors became the last of the Detroit Three automakers to reach an agreement with the United Auto Workers to end the strike. Granted, it's only a tentative agreement, and the auto workers still have to vote to approve it. I expect the workers to approve the deal with General Motors, especially since United Auto Workers President Shawn Fain and President Joe Biden seem to be in favor of the agreement. So that shouldn't be investors' main concern right now. Instead, investors ought to focus on General Motors' recovery prospects. Considering the low price of GM stock, it appears that the market has already priced a lot of financial and operational damage to General Motors. Surely, Barclays analysts understood this when they recently upgraded General Motors shares from equal weight to overweight. The analysts cited historically cheap valuations for Ford and General Motors, but preferred General Motors over Ford. Additionally, the Barclays analysts maintained their price target of $37 on GM stock. This implies fairly strong upside potential from the current share price. The analysts cited General Motors moving past the United Auto Workers strikes as a positive factor, and I tend to agree with their upbeat assessment. GM stock, it can only get better from here. Until the last few days, October was scary for General Motors and its shareholders. Fortunately, the crisis appears to be coming to an end. As a result of the United Auto Workers agreement, General Motors will increase its auto workers' wages. However, the market knows this and has likely already priced in the financial costs. So now, General Motors trades at a very reasonable valuation multiple, and the situation isn't quite as scary. Therefore, GM stock offers a terrific value, and investors should consider a long position while it's still cheap. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.